For joining in with all those details. Small finance bank companies, there's Equitas SFB, Utkarsh SFB. There's also Satin CreditCare, which is in focus on the back of second quarter earnings. Abhishek is here with the earnings fine print.
Well, microfinance sector is under pain, and we are seeing the continuity with respect to deterioration in asset quality and pressure on the lenders with respect to return ratios or the bottom line. So Equitas for small finance bank, the weak return ratios have continued for second quarter in a row. The slippages are elevated. It has increased by 31% quarter on quarter, but the slippage ratio at 5.5% is on the higher side. That compares to about 4.4% in the previous quarter. Asset quality has deteriorated. Gross NP ratio and net NP ratio have increased. The net interest margin is at multi-quarter low. It has declined by 28 basis points sequentially to 7.69%. Both the NI and PAT is way below our poll. PAT is at just 13 crore versus our poll of 157 crore. Utkarsh Small Finance Bank, the asset quality has deteriorated. Slippages have increased by 250% on a sequential basis. So the annual slippage ratio is one of the highest that you are seeing in the industry, close to 7.5% for Utkarsh Small Finance Bank. Their gross NPA ratio and net NPA ratio have increased. The disbursements are down both YOY and quarter anywhere between 15 to 16%. AM growth is weak at just 1.5% on a sequential basis. Operating profits, they have declined by more than 11% quarter on quarter, while provisions are elevated. Our provisions have increased by 150% YOY and about 67% on a sequential basis. So there was pressure on their earnings as well. So PAT declined by 55% YOY and about 63% sequentially. Satin CreditCare, they have cut their FY25 AUM growth guidance to anywhere about 8 to 10% now from the earlier guidance, that is in Q1 FY25 con call of about 20%. The AUM growth is weak at 0.4%. Asset quality has seen massive deterioration. Operating profits have declined while provisions have increased tremendously, and that is why the PAT is down 60 to 63% on a YOY and sequential basis. Back to you.
All right, that is all about microfinance sector. Thank you, Abhishek, for joining in. So those stocks are under pressure. Time for a short break now. When